a stealth winning streak. Check out the industrials, up for 7 straight days, its longest rally since December. But could the run be overdone? Let's get straight to the chart master standing by at the plasma. Carter.
Yeah, that's it. 7 straight days in a row, back to an inherently difficult level. An area of the market that's down on the year, trailing the S&P by a considerable amount. And let's look at the lines. So the lines are already on here. That is a very precise level to which this sector has rallied several times before. And in fact, we closed to the penny at that line. I think the way to draw the lines after that would be like this. The presumption is that we're going to hit our head and get a little down arrow here. Let's put them all in red. So I'm going to make the bet that this 7 consecutive rally right to a downtrend line is a rally to a difficult level where overhead supply comes into play. Let's draw the lines like this. Something of a head and shoulders top. Not great. Let's draw the lines like this with the moving average. We rallied right to exactly the declining 150 moving average. Let's do it one more time. Put those lines together. There's your downtrend line, critical juncture. Critical. Trend line, moving average. I'm going to make the bet that's going to fail here. Let's end where we started. Here is, well, actually, I forgot about this chart. This is actually worth looking at. This is important. Actually, watch this. This is the sector itself, XLI, and relative performance to the S&P. And the key here is, of course, that we never could make relative highs, even as you were going up. So watch if I put the lines in. And what we know is that relative performance peaked right after the election. And that ever since then, essentially, the sector has been going down, relative performance to the S&P. Now remember, adjusted for beta or risk, it's even worse. So to end where we started, let's just look at the following. I'm going to make the bet that this rally, impressive as it is probably at a level where the next sequence is likely down, not up.
Mike, what's your trade?
Yeah, so what I'm looking at doing here is selling an upside call spread. Specifically, the call spread I was looking at in XLI was the June 77 call spread. You could sell those 76 calls for 75 cents, buy the 77s against it for 45 cents, take in a net credit of 30 cents. You're getting approximately a third of the distance between the strikes in terms of premium. That's a ratio that we rather like here. And, you know, some people will often ask, should I use a credit spread? Should I use a debit spread? Credit spread would be selling call spreads if you're making a bearish bet versus buying put spreads. And they obviously have a lot in common, but the thing about selling a call spread is as long as something doesn't happen, you're going to make money. If it basically goes sideways or if it goes lower, you're going to collect that premium. And by buying that upside call, you're limiting your risk in case you obviously get the bet wrong. If you buy a put spread, on the other hand, you need something to happen. You need it to go lower, and you need it to go lower through the strike you buy by at least the premium you spend on the trade. So this is a higher probability bet. And, you know, the key thing when you're using credit spreads like this is just make sure you balance that risk reward, collect about a third of the distance between the strikes when you sell these credit spreads, and I think you'll be doing just fine.
Yeah, so I'd say the most important point here is a high probability of success here. So if you look at Carter's charts, and we took a look at the XLI about a month ago on the show when it was about 74.5, and to my eye at that point, I did a long put spread at the time, and I was targeting 74 back to about 70 in a way because I really thought it would get rejected at that downtrend. So here we have that situation again. The stock went all the way down to 70. Now it's back up above my prior level, and it's a matter of conviction. When I look at Carter's charts, I get pretty convicted. This would be a great level to put that short back out and play for a $4-5 move. Right. What Mike's doing, it's all a matter of sizing and probability, and it's a great trade. It just depends what you're trying to achieve.
And the important thing about this is very few sectors really broke below their February low. This was so bad. Right now, while we've ricocheted back above it, that's the opportunity to re-short, just as we did before. And it's at 7 days in a row, it's a good bet.
But also just taking a look at relative performance, you know, you take a look at the largest constituent stock of this ETF, which is Boeing, and this is something that's basically been going, you know, dead sideways. And when you have dead money, what you want to be doing is selling some premium against it, and that's why I was taking a look.
Okay, so if you'd like to learn more about how to trade options, weekly options, monthly options, yearly options, if you're looking for some option strategies that are applicable in this crazy market environment that just keeps changing and changing all the time, if you're looking to get not just ordinary results, but extraordinary results. Visit marketcrash.money, hit right here, how to profit. You will be able to learn the 5 core fundamentals that helped me turn $12,466 in less than 7 hours trading options. I know it sounds crazy, but I did it. It is a personal record of mine, and I would be willing to share every possible detail that has actually helped me accomplish that. So some of the secrets that you will discover in the video, some of the best stocks for trading options. Not every stock is actually a good product for trading options. So you will be specifically given a criteria which you will be able to apply to select stocks that are great products for trading options. You will be able to disclose the 3 best chart patterns for high option results. You will discover the key to locking in the gains, as sometimes it presents a huge challenge to some traders. You'll be able to get clear answers on when to sell, when to hold, when not to sell, when not to do anything. Also, some other secrets as discovering the huge difference between the trend and a TRO and how it could help you lock in huge gains. Discover the secrets behind timing. Can you imagine if you only knew which days to take trades on and which days to just stay away? Very importantly, never trade the news. Focus on trading market reactions to the news. And it is definitely going to help you increase your probability of future returns. So if you are ready for a breakthrough, visit marketcrash.money, hit the big green button, how to profit. Visit this page right here and set yourself free. Make your 2018 the most profitable year